Our learning objective number 2 is to prepare and interpret cost, volume, profit graph, and profit graph. So let's explore this further. One thing I would like to mention it here, that we're gonna learn all this through graphical techniques. If you don't know how to make a graph, then just try to understand it and clear the concept. That's it for this learning objective 2 requirement. Okay, let's move. So CVP relationship in graphic form. So the relationship among revenue, cost, profit, and volume, it can be expressed graphically by preparing CVP graph. So Racing Bicycle developed contribution margin income statements at 0, 200, 400, and 600 units sold. So we will be using this information to prepare CV graph. So here it is. When they sell 0 units, the loss is 80,000, which exactly equals to our fixed cost. And when they sell 200 units, their loss is 40,000. Why? Because we know that in our previous examples that 400 is our break even. So on break even, no profit, no loss. So that's why on 200 units there is a loss because we sell less than our break even. And then when the units are 600, on 600 there is a profit. How much profit? 40,000, because we sell above break even. So let's just convert all these information into a graphical form to understand further. So here you make a graph, you draw a vertical line and you draw a horizontal line. In horizontal line we call this x-axis, the vertical line we call this y-axis. On y-axis we took here dollar amount, and on x-axis we took the units or sales units, like 1, 0, 100, 200. So if you notice here, the basics of the making graph is that every interval should be the same. Each interval should be the same here. So there is a difference of 100 units each, and here the difference is 50,000. So you can see that the difference is the same. So that is the key of making graph. So let's move further. So here this line is basically a fixed line, fixed expenses. So we draw fixed expenses line. So you look at your PPT and you can find out that the fixed cost when there is a 0 unit sold, it is 80,000. When we sold 100 units, it's still 80,000. When we sell 600 units, it's still 80,000. When you connect this line here in, so this red line, and you connect it with these dots, so this is a horizontal straight line. So this also proves our discussion that fixed expenses as a whole is constant. When fixed expenses converted into a per unit cost, their behavior changes. So we are just taking here total fixed expenses. So it's a horizontal straight line. The second graph is the total expenses. The total expenses is equal to both the sum of fixed and variable. So on 0, when we are not selling anything, the total expenses 80,000. Why? Because variable cost is 0 when we sell 0 units. So when we sell 400, what is the total cost? Fixed cost plus the variable cost. You go back in that table a couple of slides earlier, you find out that 200,000 is our total variable and fixed cost. So you just connect the line. So blue line represents the total of variable and fixed cost. And the next we're going to talk about the total sales graph. So when we are selling nothing, our sales was 0. When we are selling 100 units, our sales was 50,000. When we are selling 200 units, our sales was here 100,000. When we are selling 600, then over, sorry, I think it's here. So when we are selling 400, our sale is 200,000. We just connect the dot here and you can find out the sale line as well. So in this case, the green line represents the sales line as well. So did you notice one thing here? That total sales crosses the total expenses at this point. So if you want to find out break even through graphical analysis, you need to find that condition where the sale graph cuts the total expenditure graph, right? So it cuts the graph here. So you want to find out what are the units. So units should be on the x-axis. So you draw a line here on the x-axis. On the y-axis, you draw the respective relevant dollar amount. So that would be our, so break-even units will be 400, and break-even in dollars, in total sales amount in dollars, it would be how much? 200,000, right? So that's how you prepare the CVP graph. So let me just remove this one and find out further. So here, so in the area above this intersection, that represents the profit area. The area below this break even, so that area is the loss area. That area is the profit area. Understand? Okay, let's move further. So if you want to prepare the CVP graph in a simpler manner, then just do one thing here. So you just plot two profit points, or maybe the loss points, and then connect them with a straight line. So here it is, the profit line. We just connect on the 300 bicycle, that would be the profit. On our 500, that would be profit. We just convert it on a straight line here. So that is our simpler CVP graph, right? So in that way, that point is break-even point. Remember, this is a profit line, okay? Here, profit line, not sales or expenses or something. This is just profit line. So where you can find out the break-even, so that point which intersects here, see, 0, and we know that break-even is no profit, no loss, right? No profit, sorry, my writing is a little bit messy here, so it's no profit, no loss. So you can easily find out that point on which you can find out $0 profit, and you can find out the number of units sold here. So in that case, it also proves that break even is 400 units. Good.